Okay. All right. All right. All right. Hello. Hey, traders. How you doing? This is Dr. Greg. Testing, testing. One, two, three. Happy Thursday. Good to see you. Happy Thursday, one and all. Glad to see you here in our live trading room. And my name is Dr. Greg McLeod. It's so good to be with you here this fabulous Thursday. We're doing another public look at the Pip and Run method. Not Dip and Run. Samurai. This is Samurai show, right? Guy, get it together, Greg. There you go. All right, ladies and gentlemen, welcome to the $50,000 to $50,000 challenge where we take small accounts and we scale them up big. This is a live account challenge, not a demo challenge, but a live account challenge where we actually take your live account and a small live account, a high leveraged account. We're using 500 to 1 leverage. Uh, and so for every dollar we're able to use or deposit, we're going to have 500 times the actual value. So if we have a $500 account at 500 to 1 or $50 account at 500 to 1 leverage, that's $25,000. We have $25,000 in buying power. And then what we're going to do is to scale it responsibly to be able to take that to $50,000 in 30 trades. We're coming to the end of our July challenge, and so it's too late to join, but never fear. We are starting in August, backed by popular demand. We're going to have an August challenge, and you can sign up, and I can give you the link where you can actually sign up. You can actually book a call and talk with me. I have a few spots left for the August challenge. You can actually book a call, and I will talk to you personally and get you on my calendar so you can book a demo call with me to join the August challenge. Okay. I'm going to put the link right there, and then you can book a call with me. I'm going to pin that in the top of the chat so you can actually join. Okay. And so we're just waiting for members to come in. Make sure this is pinned at the top. Great. All right. So what it is, we're if you've ever been into challenges, if you've ever failed a challenge, you basically traded a demo account for, for several days or if not several weeks, and then you don't pass the challenge, and guess what? You're out $150 or $200, and you have to start all over again if you violate their rules. The rules of, they're good money management rules. Don't get me wrong. They want you not to use up more than 8% of your account. They don't want you to have 8% risk. So, but really, if you have a $50,000 account and you only are allowed to risk or lose no more than 8%, you're only trading with $4,000. Okay, that they want you to make 8% of $50,000. So they want you to make $4,000 with a $4,000 account, which means that you have to make 100%. 100%. You know how hard it is to do 100%? Very hard. And that's why 90% of all people who take these challenges through reputable companies like Apex or FTMO, they're great companies, don't get me wrong. But if you want to get off that cycle, that loop, if you want to have no rules, if you want help from a former Wall Street currency trader from one of the world's largest forex broker dealers in the world, would you rather cheat off my paper? I remember when we first had computer science. I went to school in the 80s, and computers are just now becoming the fad thing. They had the the AP exam for computer science. So we were the first class to take it. And so during that class, we had an Asian guy, and no, I'm not talking about stereotypes, but he was smart. He was a smart, his name is Ted Fukushima. If you're ever listening to me out there, Ted, we owe you a debt of gratitude because you were the smartest kid in the class and everybody was Ted's friend, right? Because why? Because we used his code in order to help us pass that once in a lifetime, the first time it's ever offered AP computer science test back in 1984. Okay. And so we all were able to pass because we had a smart guy in the room to help us out. So guess what? Fast forward 40 years later, I am the smart guy in the room. And guess what? You get to look over my shoulder for 2 hours right now, starting now, in the next couple of minutes. You get to look over my shoulder and be able to see my trades, how I process them using our Samurai Sword strategy, which uses high asymmetric trading. And all that's mean is I'm going to risk real small stops, but I'm going to look for 5, 6, 7 times my risk. So I'm like risk 7 pips, $7 to make $28 or something crazy like that. So it's a simple strategy. The Samurai Sword is a pre-market opening range breakout strategy. So it's a little bit different than typical opening range breakout strategies, but it's been proven and been used by the famous world famous turtles, who are the most famous traders of all time. They were trained by a man by the name of Richard Dennis, who he himself took $400 or $4,000 and he turned it to $400 million, and using an opening range breakout strategy. So Toby Crable's books go for like $1,400 and $1,500 on eBay and on Amazon for his opening range breakout strategy. And one of the largest oil traders in the world by the name of Mark Fisher uses an opening range breakout strategy called ACD. And he's one of the largest oil traders in the world. So we're not using some strategy, ICT or supply and demand zones or any of this other stuff. We're using an institutional grade system, which I've got my own twist on it, an opening range breakout called the Samurai Sword. The Samurai Sword has had some powerful trades. People have used it. Many of my students have used it. It is really part of Pip and Run, right? I took the 6 strategies. There are 6 strategies that compose Pip and Run, and I said, you know what? Pip and Run is normally like $15,000-$20,000 for mentorship. And what I've done is I've taken one of those profitable strategies, the opening range breakout, the Samurai Sword. I pulled that out of Pip and Run, and now I've offered it to people, to traders, or to people who cannot possibly come up with $15,000. So hopefully by the end of working together for 30 days, you have more than $15,000, which you can use toward the Samurai Sword strategy. Okay. So let me go ahead and we're coming up on, we should have some people coming in here in our room. And let me go ahead and copy the invite link and let's go ahead and try to round up my crew who may not be able to find the red button that that shows up, right? And live trading for July 23rd is going on now at this link. Okay, so I'm going to put it right here. I'm going to paste it, and then I'm going to we're going to can we email it to everybody? And announcements. And this is actually yeah, we've got another at 7 p.m. ET. Okay, I'm just gonna go ahead and send that out. Post. Okay. Okay. And okay. So I'm going to tell you more about the Samurai Sword, and go ahead and do that. So I'm going to go ahead and share my screen with you. And again, the Samurai Sword is one of the most powerful strategies. It's part of Pip and Run of our $20,000 mentorship. But guess what? For you today on this call, it's not going to be $20,000. Okay. So let me go ahead and I'm going to go ahead and share my screen with you and go through and give you the deets of how this works, how the Samurai Sword works. You know how to take notes, and that way you can know what's going on. And Again, if you would like to make a demo call, go ahead and click that link that's in the chat, and that will help you what's going on there, right? We might have people actually joining here. So the Samurai Sword, let me go ahead and share my screen, share screen 2, share sound. And again, I want to thank you and welcome you to the Samurai Sword Opening Range Breakout. If you're watching on YouTube, make sure you go ahead and type in the chat where you're from. I like to see how far the message actually reaches people. And give me a thumbs up and a like if you like this type of content and you want to keep it coming to you. And also any subject or question that you may have that you would like me to make a video on, I would love to be able to serve you and provide you access to my 30 plus years of trading knowledge. Okay. So we're going to talk about the Samurai Sword, the opening range breakout, high asymmetry trading, or HAT, and the 50 to 50,000 challenge, and what I've created. All right. So now there's a risk disclaimer on your screen. Make sure you understand all risks associated with foreign exchange trading. And I'm going to give you some hypothetical performance disclosures. Past performance is not an indication of future results. So let me tell you a little bit about myself. I'm a trader and mentor, market veteran. I've been doing this for over 30 years. I'm a former proprietary trader at Prop Trading Desk. I work for a large Forex firm on Wall Street. I was a currency analyst, currency strategist, and mentor, and I trained thousands of people in my trading systems and methodology. I have a PhD in Christian business and Christian leadership with a focus on market behavior and risk management. I have a bachelor's in English from UCLA, and I have a lifetime teaching credential from the Los Angeles Unified School District. I taught everything from middle school all the way to college. And I've experienced, and I've traded equities, futures, Forex, and options. And I've created the Pip and Run system, the Samurai Sword system. And I'm a published writer, speaker, and a bunch of other stuff too. A father, a husband. So I'm just not some guy with a ring light that's coming at you right now. So again, I want to thank you for your time. So why winning is the wrong goal? Okay, the most beginners, they obsess over being right 90% of the time. In fact, the truth is the best traders in history were wrong like 85% of the time. And success in trading is not defined by accuracy; it's defined by asymmetry in the outcomes. And symmetry is when means our winners far outweigh our losers. All right, we lose. So for professional traders and amateur traders have one thing in common: they both lose and they both win. But amateurs lose big and win small, while professionals lose small and win big. Okay. So we're going to put on a new hat. So you got my samurai. He has this helmet, and we're going to talk about HAT, the abbreviations for high asymmetry trading. When you win big when you're right, and you lose small when you're wrong. Right. And in fact, some of the traders like the Turtles and other groups have used this type of method of trading. And in fact, for the Turtles, they would 95% of their gains came from just 5% of their trades. So precision, sharpness, and decisiveness. The Samurai Sword strategy uses the opening range breakout to identify explosive opportunities. You don't need to win every trade. You just want to you don't need to win every trade. Just wait for the trade that offers the extreme reward to risk, right? So for instance, here's a trade where we're trading the euro, and we're looking at a very big actually this is the Canadian dollar, and we had a very small risk, right? Once we got into the trade, our risk, we're risking $1 to make 5.68. And so the length of the sword here is the amount that we had at risk. The height is the risk. And we got long, and then we got out here at the top, and we were able to make quite a bit of gain, right? So let's do a little bit of math, a little bit of numbers. And with the typical ORB risk to reward ratio, 5.68 to 1, one winner covers many losers. In fact, win rate for 30%, if you lost 70% of your trades and won just 30%, the amount of compounding would be incredible, right? Now you break even if you lost 85% of your trades and only won 14.9% of your trade. If you were risking just $1 and make 5.68 for every $1 at risk, you only need 14% correct to break even. Now, many of you maybe 50-50 traders or 60-40 traders. If you were 60-40 and you had this type of risk to reward, you would be very wealthy. Now, if you're just an institution, if you're just 50% right with this type of risk to reward, then that just compounds to wealth over time, right? So being wrong versus being profitable, the high accuracy trading versus high asymmetry trading, right? So typical trading, you need to win 60% of the time. In fact, with pip and run, we have 85 to 90% win rate with that particular strategy. But if you get a big loser, if you let your losers run instead of cutting them short, one loser can kill your account. And that's the downside of any type of scalping strategy, that you can be highly accurate, but since your risk to reward is 1-to-1 or 1.6-to-1, well, then there's the emotional roller coaster. Versus a high asymmetric trading, you're profitable just 15% of the time. Your losses are capped and your winners are huge, and you have confidence in the math. Your consistency is in the math, not so much on every single trade. In fact, I knew a guy by the name of Mario, and Mario was a young Polish trader, and he had a little black book. He kept track of all of his trades in a leather book. I noticed he had minuses. I wasn't really impressed by it. I'm a professional trader. I go, really not, I'm not to show you any shade, bro, but you lose a lot. He goes, yeah, but look, I lose 37% of the time, right? He loses. No, he only wins 37% of the time. He loses like 63% of the time. So 63% of the time he lost, 37% of the time he won. But his winners were massive. It was like death by paper cut, loss, paper cut, loss, paper cut, loss. But then he would have 5-6 times his losses. And those few winning trades he had, the few positives that he had in his little black notebook, more than made up for the little losses that he took. And so it was kind of mind-boggling trying to wrap your mind around that. So this is the turtle mindset. The turtles, again, were one of the most profitable traders, trained by Richard Dennis. And it was a simple $1 bet where Richard Dennis bet his friend William Eckhart $1, the same $1 that was in Trading Places, the two old white guys that were making a bet on whether they can make Valentine, make Eddie Murphy into a trader, and make Dan Aykroyd into Winthrop into a bum on the street, and they bet $1, right? But this experiment was that they put an ad in the paper back in October of 1985, and they brought all these people from various backgrounds together, and the bet was that Richard Dennis could take a rules-based approach, teach these regular people how to trade, and they would learn his system, be very profitable. Well, William Eckert said, no, you cannot teach traders. It comes from nurture, from a gift. He thought it was in kind of a nature versus nurture kind of thing, that you're born to be a trader. You can't be taught to be a trader. So, William Eckert lost the bet, because those 14 traders that Richard Dennis trained became the most successful traders of all time back in the 1980s. Some achieving over 150% return on investment, 120%, 80%, and up to this point they're still trading and making money, right? So this is the turtle checklist: statistical inevitability, accept losing streaks as statistically inevitable. Even 20 in a row is possible. But if you have 20 losses, but if they're all small, well, then guess what? The probability is that the next trades are going to be winners. And when they do, they'll be massive winners. Business expense logic: treat every loss as a business expense. In fact, I say treat every loss as a form of information. and either telling you that you're following your system or you're not following your system. And wins are information too. So we take the value. Most people feel bad. They feel their ego gets hurt when they lose. Oh, I lost. I feel bad because it's not your fault. It goes back to our training in school 92 or 100. It's an A. Oh, Bobby, you're a really good student. You got an A. Apple polisher sitting in the front of the room. Oh, Sam. Oh, no, you only got 50% right. You get a D, and you go sit in the back of the room and I'll call your mom and you're in trouble, right? But real life, whether it's starting businesses or launching rockets, you're going to lose a lot more than you win. But the winners, when you do win, are usually they're asymmetric. They're greater than your losses, right? So discipline and consistency, maintain discipline and consistency regardless of outcomes. We don't revenge trade or FOMO and add more, stack more into it, but we actually just keep or remain constant, let the math do the heavy lifting. Tiny position sizing, our position size aggressively small to survive variance, so we can survive the wild swings of the market. And strict risk management, always protect your account from ruin with strict risk management. The whole idea here is that capital preservation is job number one, right? And then making money is job number two, because you can't do job number two unless you've done job number one. Because if you have no capital to save or to protect, then you're out of business. Your capital is your business. So protection is number one. So we want to move from guessing to compounding. We want to define your edge. Master the opening range breakout, which is the samurai sword, the edge of the sword. Where price breaks out, that's where we want to trade, and be very mechanical about it, not trying to outguess it. Or, what if we get a whipsaw? What if we get a whipsaw? Then you get stopped out and you try again. That's what happens. You want to calculate your position size, institutional risk rules for small accounts, execute the plan, only trade setups that meet criteria, accept small losses, stay disciplined during drawdowns, compound wins, let big rewards multiply, not small profits, okay? So the opening range, this is an opening range breakout. This is the NASDAQ 100 morning session. And again, the opening range breakout, you can use it with any, I use it for Forex because I'm going to be trading in the evening. In about 45 minutes, I'm going to start trading and with my group. And that's part of our $50,000 to $50,000 challenge. You get to look over my shoulder and trade alongside with me. And so when we get to that pre-market opening range, we got price breaking above the range. We get long with our stop loss below the range, or the samurai sword. And then we look for price momentum to streak. Does it do it all the time? No. Will you get stopped out more times than you win? Yes. But will your wins, when you do win, outsize your gains? Yes. So we get our setup, our market execution, and the payoff. And in this case, this trade was a 1 to 10. We risked 1 to make 10. Here's a samurai sword trade here, where price did break out north. Our stop was placed, and on pound yen, 5-minute chart, rallied, turned around, and then dropped, and then stopped us out. Okay, so we got stopped out for a small loss. And here's another samurai sword trade. Euro, which broke out above the 108.25 area, was good for 52 pips. And so we had a 5.44 to 1 risk to reward. And so the range already predefines your risk. So there's no guessing about where should my stop be on the other side of the sword. Where should I go long? When it breaks above the sword. When do I go short? If price goes below the sword. So it's very, very clear. Now, in the $50,000 to $50,000 challenge, the whole idea is to take $50 using position lot size, go for our first goal, then our next goal, and then over time, it will compound when you're consistent. Now, we've had traders that maybe the first month they took $50 and they turned it to $300. They're not very happy because it wasn't 50,000. But guess what? Unlike one of the current challenges, like in Apex, if you don't make 8% on the demo, then guess what? You lose. So if you break the rules, you lose. Here, if you don't hit your target in 30 days, you get to keep the money. It's your money. You don't have to share it with me or anybody else. If you turn 50 to 300, that $250, the whole $300 is yours, right? You might spend it on a dinner go out with your wife, or you might need to do a car repair or something like that, or you might want to roll it over to next month and try another level, right? We had one guy that actually, he got up to, $1,600. He got to $1,600, and then what he did was he cashed out and then started again for $50 again. He more than made for his $147. And in fact, he signed up for, hey, the annual is $1,497. You're going to save $153 because guess what? We have an ecosystem. Not only do we have a plan, we have rules, and then you get of engagement, not to penalize you or keep you from making money. You're making money from day one. And if you're right, you're making money from day one. If you're wrong, you're losing a little bit. But guess what? It's your money. It's real money on the line. It's not a demo. It's not someone's demo, because you basically are trading 3 demos in those challenges. You pass demo stage 1, demo stage 2, and then you have what's called live demo, where you get live money, and maybe you have to trade 4 or 5 days after that to even make a withdrawal. Here, you can withdraw from day one if you make money, right? If you took a trade and all of a sudden you made $10,000 in your first trade, highly unlikely. There's no waiting period. There's no cooling off period. There's no consistency rule. It's your money. It's like there was that old commercial, JG Wentworth. It's my money and I want it now. It's your money and you can get it now. And other challenges, you can't get it now, right? So that's it. Now here's Mira. She turned a tiny $3,000 account to $150,000 at 50 times growth. Again, these examples are not typical, and your results may be far less. You might make just $700, but if you only paid $147 for the challenge, it'd be great. Or if you only made $3,000 in the challenge, but you paid $1,497 for the year, and guess what? And the year is not over yet. You still got another 11 months. Then that's okay too, right? We had Mike C. He made a $10,000 milestone, took his small account to $10,000. He was disciplined. He was focused. He used the power of compounding. Real happy guy. We got Rod. He did really well. He didn't make $50,000. Oh, sad. He didn't make $50,000. He made $34,000. He said, I start off a small account and a big goal by staying disciplined, managing risk, and letting compounding work its magic. I grew it over 34,000. Patience and process made all the difference. And what made the difference? Discipline over emotion. He followed the plan every time. Risk management first. He protected capital to stay in the game. And the power of compounding. Small steps, big results over time, right? And then Dirk, he turned his disastrous results around. For years, he chased profitability. He chased indicators. And then the shifts as he stopped chasing. He stuck with the system and stopped jumping from system to system. And he went around, he doubled his account 3 times. All right. And now he doesn't even shoot for the 50,000. He takes 1,000, changes it to 3,000 or 4,000, 5,000, he withdraws it and just does it again on repeat. And this compounds it outside in his checking account each time. And if you're making $5,000, $6,000 a month, who cares, right? So we come to the end, and I just want to challenge you. If you keep doing what you're doing, will it continue to work? And how do you see yourself 6 months from now or a year from now? Will you be doing the same thing that you did in 2025? If you don't make a difference, if you don't make a change, if you don't try something different, and this is different, no one I know is offering a program or a system like this, the $50,000 to $50,000 challenge, when you actually take your own money, taking a small account and scaling that repeatedly with live coaching, we have a powerful group. We have the Samurai strategy. We have the video module course to teach you the strategy. Plus, we have our indicator, the Samurai Sword ORB, which is a beautiful piece of software, which I'll take a minute to share with you. and show you about that, right? And because there because we use the power, AI is everywhere, right? AI, everyone's looking at AI. We use AI as a tool for manual trading. We use the Samurai Sword ORB. If you go to we have our dashboard where we have our Sydney open. Sydney is active, and we go ahead and refresh and go ahead and click our sound here, and then go for our all Forex pairs there. And then what happens is we will be able to see right now the market is just open. It's just Sydney is just open, and so we might not get too many things loading right now. But this is the dashboard, and what will happen is, and here we go. We have the U.S. dollar index, the U.S. dollar. We have our Swiss yen. We have, and we'll scan for trades and find out ones that are breaking out. When you click them, it will show you a chart showing the opening range breakout, the Samurai Sword. And when there's a breakout, it'll give you the profit, the entry, the direction, the entry, the stop, and the size. So this is scanning all the currency pairs, all 83 currency pairs, plus financial instruments like the indices, CFDs like gold, silver, and oil. And you can actually look at the possible trade setups. Like here's Aussie Kiwi for breakout. Right now, everything's kind of ranging right now, but it tells us the currency, the grade trade, how good it is. It's an A setup, right? And it tells us what direction it's going. If there's a confluence or if we're counter trends, right? Counter trends are usually, we have a counter trend trade. We probably, we want to stand aside. We want confluence. Trades are going in the same direction. Here's the Euro Kiwi, right? And so we have this, and then we have a little sound where we actually have a dong, which will ring and tell us when something is breaking out from the range. So it's looking at all these ranges, and when it breaks above the range or below the range, it gives us an alert. And so now we can watch Forex pairs, instruments, FX crosses, and you get lifetime access for the Founders Special that is ending tonight. However, if you want to, after that, it's just a year. You get a year subscription with the year elite package. Oh, and there's natural gas is breaking out. It just came up, and you heard a little Japanese gong there, right? And then you can see that there's natural gas. So there's a Tokyo session, a London session, New York session, and you have Kenji, which is our AI software, which scans and finds the best pair, and we'll see 3 pairs there. We'll also have impact news releases, and then we also have his trading log, equity, and things like that. So that's you'll get access to that on the elite tier. You have live trading with me, VIP community, a $19.97 value, live trading with Greg at $29.97 value, all the pro tier features $16.50, plus a live session library, all the recordings that we have. You'll have access to that, and you'll be able to watch that, learn from it, and see our trades. Bonus includes we have 3 AI analysis tools, Trend Spotter, the North Star, and the heat map. So you get the ORB scanner as well. Private one-on-one sessions with me, $997 in value. You get 45 minutes with me once a month, and that is included. And the VIP Gold Star email support, $12.97. And so the whole total package is $14.97. And we have lifetime access available only for this evening. Only after that, this becomes a year package. The total value of this package is $14,857. It's yours today for a fraction of the value. Just think of all the other challenges that you've paid for and failed, and you paid $200 a piece for them, and it'll cost you $2,400. You do not have any software, a support, a system, or a professional trader who's going to work with you to help you achieve your goals. And so you can go ahead and lock it in now by clicking the link in the chat that's pinned there, and book a call, and we can I can tell you more about it. I have a few dates on my calendar, and I look forward to being able to show you, give you a demo, show you how all this works and how it can help you. And I want to thank you so much for being part, for watching this call, and you'll look forward to helping you in the future. Okay. So with that, I'm going to check to see if there's any questions in the YouTube chat. And then you also have a chance, as a $14.97. We have a $5.50, 3 payments of $5.50, 6 for $16.50. And our starter tier is actually $199 now. That's but we can adjust that if you get on a call with me. Let's go ahead and check to see if there's any people there who are watching. Okay. All right. So cool. So cool. Okay. I don't see any questions. Remember, you can book a call. I look forward to helping you. Peace and pips. This is Dr. Greg. I see a question about trades that we did today. Let me show you a couple of trades that we did today. In fact, there's a trade that we're in now, right? This is the Samurai Sword, and this is the actual Sydney opening range breakout. And after a big drop, we're up $6.70. Which is a pretty good. If you have a $50 account, that's a good way to start. We're risking $8 to make 24. That's a 3-to-1 risk to reward. We had another one here where we actually took a short during the London session. Here's our London session drop. This is the opening range breakout from London. Let me go ahead and remove all the drawings there. And so I got short. Let me go ahead and add the arrows, the execution marks where I got in. So here's the arrow. And we got short at 1.1423. This is the opening range breakout. You also get the indicators, the templates for MT4 and MT5, as well as TradingView. I love TradingView for charting and for trading. We got just short at 114.23, and then price dropped, and we were able to exit at 113.89. And so we were able to clock a pretty good amount of pips there, about 60 pips on this drop, right? And then we did similar drop in the Aussie dollar. Aussie dollar was good because we are able to double clutch this thing. This is their opening range breakout for the London session. London opens up at 3:00 a.m. Eastern time. Previous, we look at the first 30 minutes before the opening range, and we see we got short at the arrow at the 0.7002, and then price rallied back, and we have a break and touch the top of the edge of the Samurai Sword. Got short again, so we got 20K short. Our stop was located here, so we had a stop from 0.05 to 14, so a 9 pip stop, 18 pips total because you have two 10K lots, so we're risking 18, and we dropped it all the way down here. So if we do a risk to reward with our entry here and our stop there, and then we're looking at we had a 2.9 to 1, almost a 3-to-1 risk to reward ratio. We're risking $1 to make 3, and guess what? You only have to be right 33% of the time in order to multiply your account and be profitable. So we took that one, a short dollar CAD. We were able to get long on the break above at 1.4069. We got out at 1.40885, right? So that was a pretty good run there, right? Our entry and our exit. Our entries are clean. Buy above the sword, sell below the sword. Pound dollar, we got short. Again, do we double clutch that too at 1.3373? And then price rallied to retest the Samurai Sword, the edge, at the 1.7372. And then we got out, probably left a lot on the table. We got at 4.9. 3,349. So we got about 30 pips, 23 pips out of that. But we had 2 lots in there, so about 46 pips in total. And it dropped again, right? If we were able to actually stay in this trade and milk it for all it's worth. And I took these trades while I was sleeping, guys. I think I drank too much water and I got up in the middle of the night and I saw it retest. I put that second trade on, but then I went back to sleep. Went back to sleep and woke up and I had 23 pips. Now, how many times have you guys have ever done that? Gone to bed, wake up with a trade, and then you're stopped out. But this went for 75 pips, and you can see the 5-to-1 risk to reward ratio. If I went ahead and I kept that going, move my stop into break even, and let it run on down, and capture the whole average daily range, right? In fact, what was that? That drop from here to the low was 76 pips. A 76 pip drop with about a 15 pip stop. Yeah, so 15 pips stop. Anything else? Like dollar yen was pretty massive. Massive run from 163.11 all the way up to 163.99. So like an 80 pip, 85 pip run, right? Just your risk is tiny. You have a tiny amount of risk. Now, using a small account, so I didn't have enough money. I had more trades, more possible trades than I actually had money to trade, which is a good thing, right? It's a good thing to be. That's a 15-to-1 risk to reward ratio. Where? I mean, got the triangle there at the arrow, moving averages crossing up, and then, but we have the samurai sword, the edge of the samurai sword. Probably that was at 3 o'clock. At the moment at 3 o'clock a.m., London opened, the opening bell, bam, we had this giant explosive move that went on and on and on and on. Okay, for about 8 hours, 7 hours, right? 11 o'clock, almost 11 o'clock in the 8-hour move. So it took the 8 hours. So anyway, that's the strategy. That's what we do with the samurai sword strategy and the opening range breakout. A very consistent strategy. There's not a lot of bells and whistles to it. It's a breakout strategy, one of the simplest forms of strategies there is. If you have pip and run accounting with that, what we do is we find lots of, we stay up for that trade and actually trade scalping around the core position, right? So we have our core position, which we take from the low to the individual target, but we're scalping in between this scalping around the core position, getting in, getting out, getting in, getting out while we have that. So we magnify the gains. So once you finish the samurai sword and you're able to move into pip and run, we really show you how to magnify gains and really accelerate your profit. So anyway, thank you so much again for watching. We'll talk to you soon. Click the link in the description or in the chat to book a call with me, and I'll be more than happy to help you in getting set up and getting started. So click it now, book now while we have just a few positions available. And in fact, let me show you once you get there. One more thing. That's one more thing. I know. One more thing, right? Share screen 2 sound. Okay. So yeah, you'll go ahead and click the link, book a call, trade consistency blueprint. You book your free demo call, and you can watch the video there. Well, basically rehashes what we just talked about. And so you'll learn about the consistency blueprint, and then you book your free demo. You can go click. We have a few dates left on the calendar that you can click, and you can book your call. And you also can scroll down and see some of the people I've helped. I helped the guy turn $800 into $9 million. I helped the substitute teacher turn $1,200 into $100,000. I helped another guy, HVAC guy from Missouri, turn $2,000 to $20,000. I helped this lady make 600 pips a day with her team. I had a guy turned the 96% win rate. Guy that turned turn 1,000 into 9,000 in 60 days. And so if you want similar results, then go ahead and click the book my demo link. Actually more. In fact, I had a couple of those. Well, this is my attorney. He learned how to trade and retired and stopped being my attorney. This guy, he's on fire. Keelan, he turned 200% in one move. He flips his account. He doubles and triples his accounts on a regular basis using a combination of Pip and Run and the Samurai Sword. We also have Peritas. She's transformed her trade 90% win rate. We got Jimmy from Singapore, from $6,000 loss to 100% win rate. That's perfect. And then we have a guy that one of my students, 19 years old, paid off all the student loans and was able to start a business using the money. He made $10,000 before his first class using our strategies here. And then we had a UK doctor who was able to make money during COVID when they closed his clinic down. And so lots of great inspirational stories of people who I've helped, real people that not paid. And you can learn more about my system. Okay.